are finally back. Are we back?
You remember how to use that thing?
Nope. Just making it up as I go along.
It has been a hell of a 2 weeks, my friend.
It has. We want to bring everybody up to speed.
Why not?
I'm going to have a nice big cold glass of COVID.
Yeah, you and me both.
Yeah, we've both been sick for for me it's been 3 weeks. Jerry, you were a little behind me.
A little bit behind, but yeah.
Yeah,
this COVID thing is no joke.
It's for real.
It is for real.
We both got it. Thank goodness nobody else around us got it. All the families tested negative and all that kind of stuff. But yeah, we were out for the count. There's almost a good week there. I don't remember.
Yeah.
Thank God we're reasonably healthy.
Yeah, it was bad, and we're
still not 100%.
No, but we're not even close.
Well past the negative, and you know,
we're certainly able to look at the charts and come up with some pithy comments about.
You are. You're looking at the charts.
Yeah, you're the pithy comment guy. I just look at the charts. That's right.
All right, we ready?
Well, let's do it a little bit. Let's see where we go. Okay, so Jim Rohn was one of the early self-help movement figures. He was an author, entrepreneur, early into the motivational speaker circuit, was an early mentor of Tony Robbins, Jack Canfield, Harv Eker, among others. Jim Rohn died back in 2009 at the age of 79. So one of the quotes attributed to him is, "Formal education will make you a living. Self-education will make you a fortune." So why did I put that up with respect to what we're doing here at Grow My TSP?
Tell us.
This sort of bridges the gap almost. Obviously, this isn't formal education, right? No one's...
What we do.
Right.
Yeah.
No one's writing us what am I paying for my daughter to go to school? What would I be paying if the Navy wasn't helping me? $50,000 a year or whatever. That's formal education. This is not that.
Right.
On the other hand, you're not going to get this in formal education.
No, these classes don't exist.
No.
We know because we would have taken them.
Oh, yeah. So what we're doing here is helping you self-educate, basically. If you're watching the show, you're probably also reading the Sunday updates. Look at some of the content we put out during the week, and the whole idea is to get to. I mean, I hate the word educate, but to get you motivated enough to look at the stuff on your own, and get some ideas about how it works, because it's kind of like riding a bike.
Yeah. And
then validate your ideas and stuff on the weekends when we come together and do the show.
Right. So when we give you the technical analysis, you do your version of that, whether it's just as hardcore and heavy as you do, Jerry, every day, right? Digging into all this stuff, reading all things you do. There's that version, right? And then there's the version of where most people just don't have time to do that, or the inclination, but they want to be at least a little educated, so they go out and read a little bit, and then we always talk about how to validate your decisions going forward. And there are people that don't always follow your reallocations or our reallocations, right, when we do our changes. But at least they're doing it mindfully.
Yes.
That's the key. Right?
Yeah, right. Because like we say, everybody has different circumstances.
Different risk tolerance.
Risk tolerances, all that.
You have to give me like a thumbs up and I'll cut off your mic. So you don't cough in it. I get the benefit of cutting my mic off when I cough.
Dude, the cough. The cough is the worst. It's way, way better, but man, that's one of the worst parts of this thing.
We're sorry, folks. You're going to have to hear us whine a little bit because it's been a rough couple of weeks.
It has.
But back to the education. So I like this quote because I don't know if this is going to come across the right way, but one of the things I learned, I've been like a habitual student my whole life in college. You know that. Like Jerry was smart enough just to stop after the Naval Academy. But I always, Uncle Sam was paying for it, whatever. So I kept going to school. I got a master's and went on and started working on a PhD for 2 or 3 years there. But as you got farther in the formal education, what you find out is there's no book for that either, right? You read a lot of books and research, and then you work to add to the body of knowledge, right? So it's almost like, so, you know, it makes more sense to say this isn't formal education, but maybe it is, right?
We are absolutely contributing to the body of knowledge.
We're on the far edge of that, which is what, you know, if anybody hasn't, you know, had access to those later years in formal education, right? You know, masters and go on. You know, it's not, you know, professors aren't really teaching you anything.
Right.
You have to go out and figure it out. They're guiding you and all, you know, validating.
Yes.
Right. Your critical thinking. That's probably what they teach more than anything is critical thinking. And I think that, you know, when we're putting together a course over time that we'll, you know, be making available to members, but built into that course is going to be a little bit about critical thinking.
Sure.
Like being able to look at this information and, well, let me back up, looking at the data and making information out of it, right? Because you can look at a chart and not understand what it's telling you. Right? Because at the end of the day, if you know how to read the chart and you know how to read the data, it's telling you a narrative.
It is.
It's telling you a story.
Yep.
Right? It's back.
We're going to get to that in a minute. Yeah. That's exactly right.
But it's giving you the narrative, and if you know the narrative, a lot of times you know where the story's going, right? So you can kind of be ready for whatever happens in the market.
Sure. I mean, it's not all that different than what Fauci and the rest of them are doing with the COVID thing, right? Yeah. On the one hand, nobody knows, right? Nobody knows, and it frustrates everybody. On the other hand, they're looking at data and they are giving you their best guess with or without a crystal ball, depending on which spin you want to look at. But the reality is they're looking at, they're using an educated version of which way is this thing going to go. And it's not too different than what we're doing with technical analysis on the stock market.
Right. I think we're doing a better job, but that's just, I'm biased.
Well, we have the ability to actually manage downside risk.
Right. We're beating the market. I don't know if they are.
Yeah.
All right. Let's get on into the slides.
Let's see what we got. Weekly update, 18 October 2020. All right. So I wanted to go back at first and look at go back to 2009. So this is probably as far back as we would ever need to go to get the big picture view of the thing. 2009 was the low, was the last major low for the market. So let me make sure I get my pen up here. So this low, nope.
That's not it.
Golly. There we go. This low right there in 2009 was 666.
Ooh.
666 on the S&P 500 was that point right there. Since then, up to 3,600 here. 666 times 5.4 is 3,600. It's 540%. 540% move. It's a lot of money. Big move. And it's happened in 5 steps. 1. 1. A, B, C. 2. 3.
Make the numbers a little bigger.
Okay. 3.
There we go.
4. 5. So that's not absolute. That's my best reading of it right now.
Yeah.
Here's the good piece about that. When the market moves in 5 steps, it's an impulse wave. There's an impulse wave and a corrective wave. The 1, 2, 3, 4, 5s are impulse. The ABC are corrective. Okay, so it's like when waves on the beach are coming in. You get one wave that comes in, and then the water pulls back. The next wave maybe doesn't come quite as high as the previous one. comes back, and then the next one goes higher than the first one, right? It's like that. And then at some point, it gets to the high water line and starts going backwards, right? So it's the same kind of idea. So if we know that this big move since 2009 to the top there in 2020 is an impulse wave, then we know that the next move is corrective. And if we can anticipate where that corrective wave will end, great. It doesn't have to be exact, but that's good. The big thing here is we know that we had an impulse wave, then we have a corrective wave, and then the next wave is a bigger impulse wave. So we just had, from 2009 to 2020 is 11 years of a 5-step impulse wave. Maybe we have, I don't know how it's going to look, because honestly the chart is kind of goofy because we've already been to new highs and all that. But we need a corrective wave to correct off that 540% move. Did we get that in one foul swoop right here? Is it possible that 34% move was the correction to this whole move? Is it 1, 2, 3, 4, 5? Like, are we looking at something like that?
Mm-hmm.
I don't know. But
what would tell us? At what point would we know that it's headed in that direction? Obviously, it has to keep going up.
Yeah,
but not completely. But I mean, is there a line in the sand where we go, oh, well, yeah?
Yeah, I mean, I'm kind of going to get to that in a second, and I would have liked.
I'm always getting ahead of you.
I would have liked this chart to be a little bit different. I mean, the recovery that we've had since the low in March is not helpful for my for my chart, but it is what it is. I mean, if in fact this is 1, 2, 3, 4, 5, then this move here is big enough to be the correction. The time isn't enough, but the price move itself is enough. So it's possible. The big thing is going to be what happens next. We had a huge move right here. This huge move. I mean, it can go higher or whatever. At some point, it's going to have to correct. And then if it goes higher, then we know we're in a longer term move higher. This is the piece right now in the short term that we need to see.
That's the big unknown.
Yeah.
Yeah. And I mean, if we buy in a little bit to world events, right, there's a lot going on.
Yep.
And that where you just circled, right, at the end of 2020, beginning of 21,
yep.
At least as far as the U.S., you got election, you've got potentially resurgence and COVID, however you describe that. It's hard to tell what's really going on, but let's, whatever data we have to look at it. Because, I mean, that's obviously the things that happened in 2020. That's why there's this huge, or it's not, maybe not why, but it did happen at the same time, right? So we know that. So, it's going to be, I think, from just a more simplistic view, I think, the world between November and February,
yep,
it's going to tell us a lot.
Absolutely.
So that's where we got to fill in that blank.
Yeah.
Is like November to January is going to be, but historically, Jerry, what happens in that time frame historically?
I mean, generally,
forget an election year, forget pandemic.
Oh, well,
like historically, like there's a certain time of the year
right
where
after November you should be in the market. I mean, seasonally, as far as the seasonal stuff goes,
right.
Yeah, after November you should be in the market. Yeah. Mm-hmm. There's a saying that as goes January, so goes the year, and as goes the first week of January, so goes the month of January. I mean, there's all these little sort of ditties about it, but Yeah, once you get done with October, middle of November, as far as historically, seasonally, you're better off being in the market than out of it.
Yeah, and what I would argue is, or emphasize, is now is the time to not take your eye off the charts, right?
It seems like I'm saying that all the time, but yeah, now is definitely not the time to take your eye off.
This year is definitely different than most, but this point, for a lot of reasons, you don't take your eye off the ball. If anything, please read the weekly updates. Please watch the show. If you're in this with us, now's not the time to go, it's holidays.
I mean, people should know that. Like, if you have to have your head in the sand in some kind of crazy way, not to know that.
Yeah, but sometimes we need reminders.
Yeah.
I know I do. Yeah. I always play the dumb guy because I'm good at it. But I would want you to tell me, Jerry,
now's the time to chill and go on vacation and don't worry about it.
Yeah, don't worry about it. It's the holidays year. It's all good. Everything's, the market's going to go up. It always does. And, that's don't take that approach right now. No. That's not smart.
I mean, we're gonna get to a couple different things, but we just went through the whole 1, 2, 3, 4, 5 on this chart and all that. Here's another thing on this chart, though. You get this top here. This top is higher. This top is higher, and this top is higher. So you get this line, right? Then you get this low. This low is lower. This low is lower. So you get this line. I mean, it's
looks like a fatal funnel to me.
I mean, if you were looking at that and you didn't know what you were looking at, and it was one of these MMPI tests or whatever, what would your answer be? Which way is the market going to go next?
Right.
If you were in third grade, you'd say the market's going to go that way.
Right.
Right. I mean, it's obvious, right? Whether or not it happens, I don't know, but until it breaks through,
well, someday it will happen.
Yes, that's why this particular shape is so bad.
Yeah, someday in our future, I'm pretty confident, and I'm not a technical wizard. We will hit because that's just how it works, right? It will hit back down there. That may be 2 years from now, right? We don't know how far that will stretch out, but it will eventually go down, right? I mean, that's
no,
it won't.
Not necessarily. What I'm sort of, I'll say, hoping for is that our next thing is something like this. I'm hoping that so if you extended this line out, we do break to the upside, and we know that because this, however we get there, if this is as low as we get, then we don't test down here again.
So we'll break that trend.
Yeah. Yeah.
Okay.
That's what I'm hoping to see.
Yeah.
But yeah, we won't necessarily see that.
We don't know.
No.
That's why we're going to be watching it like
we can
crazy.
absolutely get 1, 2, 3.
Yeah.
And we talked about it a little while ago. It's all these corrective things. This little one here is a 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, and then it's just a 1 and a 1. But almost all these. Sorry, dude. Almost all these are corrective waves. So now I'm talking about things you can't see. So let me move on to the next one.
All right. We beat that one to death.
Yeah. Well, it's all I did was zoom in on this one. And I think I put this up a couple of weeks ago. But so this is, instead of a 13-year chart, now we get a 5-year chart, right? So the reason I put in all those green arrows is every time the price dropped below the 50-day moving average, which is the blue line, every time the price got below the blue line, it went down to the red line, which is the 200-day moving average. So all the way back to 2016, when the market got back up here above both the 50 and the 200, right? It broke below the 50 day, hit the 200-day. Broke below the 50-day here, hit the 200-day here.
I don't know. I don't know if we're seeing that. I'm not seeing those little marks.
Right. Here it hit the 50-day.
There we go.
Here it hit it. Here it hit it, but it never went below it.
Mm-hmm.
Right? It kept hitting it. Now here,
drop below.
It dropped below and hit the 200.
And the blue is the 50-day.
Blue is the
red
50.
is the 200.
Red is 200. So every time since 2016, the market has gone below the blue line, it has hit the red line. Except here. So in the last 5 years, every time right here the market went below the blue line, it hit the red line.
Mm-hmm.
Except for this correction we just had in September.
Yeah.
So what's going on?
It hit it or went below it, right?
Right. Only twice. So here it hit it and went below it.
Yeah,
That was once. That was once, and this is the other one. So twice.
I just want to make sure people see, understand.
Yes.
It's not just that it touched it, like it touched it or went below, right. Except
this correction we just had in September.
Unless,
yep.
Go back to what we were just talking about.
Right. That's right.
And that goes down there because it's that funnel that we were just looking at, right? So if you go back to 2016 and you look at the data, right?
Right.
This isn't any gut instinct. This is
right.
This is real. Then it's telling you that there's a darn good chance it's going to go down to that red line.
Yes.
And we don't know how fast.
No, and we don't know that necessarily will. I mean, this is actually a chart that I did on October 7th. So,
but it's 4 years of data.
Yeah. It's just that the last couple of days, when you look at it, like the price right now is not 34.19. It's actually 34.85 or something. We'll get to it, but it's a little bit higher from that. But it is very strange that both the RSI didn't get to oversold levels, and we have this gap. I would have felt much better with the rally that we currently have if we could have gotten back down to this 200-day moving average.
Right, because it would meet the trend.
Yeah.
And it would confirm that. Oh, okay, all right.
I mean, I actually had my finger on the buy button.
Yeah.
I was fully anticipating when it got to within about 10% of that 200-day moving average. I already had the decision made. I already had the alert made. I mean, I was ready.
I always love those text messages.
Yeah.
Hey, Connor, we might do an alert.
We might do an alert.
But we might not.
And unfortunately, we didn't. But so
a lot goes on here when we do an alert. Jerry's writing essays, and I'm doing technology stuff, and because we want to get all the right. I mean, that's the key for all our members, right? Is for you guys to know that there's a lot that goes into making these decisions. We don't make them very lightly, and I mean, Jerry. And this is I say this probably every few shows, but it's one of the reasons we ended up working together on this is because I followed Jerry for years, and the one thing that I like about Jerry is it doesn't put emotion into it. I mean, there's a 99% chance that it's going to be because that's just what the numbers say.
Yeah. Right.
And that's how you have to manage your money. If you're able to take emotion out of it, which most of us are not able to do. I mean, I'm not.
Yeah.
Right. I mean, I put an emotion all the time into my purchases, but I like to be able to fall on, the data. And if this is what the numbers say, this is what the numbers say.
I tell you, this month has been rough because October 1st was the day we did our first reallocation for the month. It was
the day I tested positive for COVID.
This has been one hell of a month. Yeah, it's the worst tactical position to be in is to move into the stock funds on the first day of the month. It gets no worse than that.
And why is that?
Your next move, presumably, is out, right? In our case, we moved 50% in. So our second move could double down, right? Because I told you I had the alert in my head. I knew when I was going to get all in. I knew what it was going to look like, and it just hasn't gotten there yet.
Yep.
But that was my plan for the month of October, was that the market would come down to that 200-day moving average before the election. Mm-hmm. And
so we'd hit that bottom.
We would hit that bottom, and I'd be all in.
Be all in.
And that would be my second move for the month. and then November would come around and we'd be good.
And here we are.
And here we are. Right. That's not what happened. But it's okay because we were only 50% in.
Yeah.
So we got fit. So the market went higher, right? We got in October 1st was it had gotten back above the 50-day moving average. We got in 50%. Because you never know.
Right. And that's the managing risk part, right? And so if you're just in a situation where, and we know people that are our members and our friends, and then we talk offline and things, and there are people that they want to be a little more risky.
Yeah.
Right. And that's fine. But there's also, I think, probably more of the opposite, where we have people that tell us that, like, I wasn't feeling confident enough.
Sure.
And I want to protect my assets, so I went all G.
Sure,
right?
sure.
I'm not 50% in. I'm 100 out. Right. And you know what? Those people slept well at night.
I mean, look at this chart.
Yeah.
We are within a couple of percent of the all-time high.
Mm-hmm.
I mean, it's easy to get sucked into the micro view and be like, oh man, I lost. I was down. It was a red day, and I never get out on a red day, or however that goes. Like, you are at the top of the top of the top.
Right.
I mean,
and there's, we get a lot of people, I wouldn't say a lot, we get a few people that just nitpick the heck out of this to where I stayed in and I got this. And it's like, well, you were rolling the dice.
Right.
You didn't know. You didn't know. It's okay. That is a way. You can wing it.
Absolutely.
Right. And sometimes you get lucky.
Yep.
And yes, historically, the market always goes up. Yep. But what we try to do, our best, is to A, manage risk, B, don't lose money. No, it's the other way around. A, don't lose money. Yeah, and I didn't realize the importance of that until we really started digging into this, how important it is to not lose money, because math is on your side.
Definitely.
Right? Yeah. Math is on your side. Compound interest only works if you have money in the account.
That's right.
And so if you have that money in the account, your compound interest is higher, and then it's just exponential.
Yep.
So over time, if you lose less money, right, and then you gain when you can,
yep, your
pot of money will be bigger than a person who took losses, but rode the wave all the way to the end. That's math. Like, people, I still think a lot of people don't grasp that are, kind of halfway in our camp, that are kind of like, oh, you have higher returns than that. And like, yeah, but we didn't lose any money.
Yeah.
Yeah. Okay. Our returns look, comparable to other things, right? Yeah. Other people, whatever. But we didn't lose as much money as they did.
Right. If the next major move, if this thing does come down some way or another back down here, we're not going to take that loss, right? We didn't take this loss. We're certainly not going to take this loss.
Right. Because the chart will tell us to get out.
I mean, as it is now, we're only 50% in.
Yeah.
We're not taking this loss. Now, we are 50% in, and I am fully ready to get 100% in, given certain circumstances.
Or 100% out.
Or 100% out. I mean, that's what we do here, right?
Yeah, we don't just watch Bloomberg.
No, we entertaining is Bloomberg and the rest of those morons. I didn't say that out loud.
I didn't say morons.
Yeah.
I watch it to get a little education and to hear people talk about other things that don't matter. But at the end of the day, it's not going to tell you where to move your money.
Oh, no.
Not MSNBC, not Bloomberg, not any of it.
I mean, Kramer will tell you.
Yeah, he will. Yeah. We should do like a spoof.
We should do a spoof.
Can I roll up my sleeves and yell a lot?
Yeah, like my tie going.
I'll just make shit up and just start yelling. That would be fun.
If you ever, you should read his book. He used to work for State Street, I think it was, and his wife is actually way better than he is. She's like really the brains behind the brains.
Choose the case.
Yes, that's true. That is true.
Give him props where it is.
Yeah. His wife was quite a Wall Street magnate. And he's an entertainer. He's a great trader. I mean, definitely nothing. No one's taking anything away from Jim Cramer, but he's a really good entertainer.
He's a better entertainer than probably trader. He's fun to watch.
Great to watch. Yep.
Yeah.
Yep.
Just don't make your TSP decisions based on what he's yelling.
I don't. I wouldn't recommend it. Okay. All right. So just to finish up on this idea of what and why I kind of want to see a correction and where would the correction go and what would it look like?
Yeah, you're probably going to have to zoom in a little bit there for us to see those
Okay.
lines once you do some drawing, if you're going to draw.
Let's do this. This is a weekly chart as opposed to a daily chart. And so the blue line is
So
the
it goes
50,
back 5 years, back to 2016.
back to 2016.
Yeah.
The blue line is the 50-week moving average, which roughly corresponds to the 200-day moving average.
All right.
Right.
So it's not the 50-day.
No,
It's 50 weeks.
it's the 50-week is the blue line,
and it
and
closer
roughly
to-
corresponds. If it in terms of days, it's like the 200-day moving average, which is why you see the gap, a similar kind of gap that we had.
Right.
Okay. We would want to see if this is actually the top, then the correction we want to see somewhere down to 38%, 50%, or 62%. And if we got that,
Why?
that's the Fibonacci numbers. It's the way the math kind of works.
And if we went back to that other chart where we drew that funnel, that's close to that line.
because that's
Yeah. That's
where basically
kind of why I was asking you that.
yeah
Is this relates to what we were talking about, where
Yeah.
if we want to see it kind of get down there, because then that will confirm.
Yeah.
What
Yeah,
we're
if
talking
we get down to that 50% retracement level, even the 38%, if we get somewhere here or here, and then we get a pop up, I'm in 1,000%,
Mhm.
and it's a hugely bullish event if that happens.
Right.
So that's what I'm hoping to see. That's why I have these. I'm looking at the Fibonacci lines a lot.
Yeah, and when we talk about having lines in the sand, like we really have them. I mean, it's amazing when we're going back and forth, texting each other, talking about whether an alert's going to go out or what we're going to do, and Jerry's talking about it, and he's got. I mean, you're looking at the lines in the sand.
Yeah,
right?
absolutely.
And so the reason I point that out, though, is again, it goes back to the fundamental, philosophy for this whole website that we do and all the stuff that we do is about education. And so if you're able to go in and make those lines in the sand for yourself, they're going to be pretty close.
Yeah.
And you're going to understand why. And you're going to know, your risk tolerance is going to be a little different. Your situation is going to be different. You might make a different decision, but you're going to be making a conscious decision.
Yes.
Based on facts.
Yep. Definitely.
Not something
Water
crazy,
cooler talk or
whatever happened yesterday in the news.
So how last one of these, promise. Here's why I'm optimistic and why I think it might play out this way.
I love it when you're optimistic.
Well, like we said, the ABC is corrective. Okay. What happens after a correction is an impulse move. And an impulse move can go up or down. And if the impulse move goes down, the corrective move is going up, and vice versa. So the last impulse move since 2009 has gone up. The last impulse move, like we can see, this here is one big impulse move, right? And it goes back to 2009. A corrective move happens in 3 waves, A, B, C. So here's A, B, C. And then we have a B, which is where we are right now, basically. And then if it rolled over, we would get an A, B, C down to that 200-day moving average, and this is where I wanted to buy it, right? And we would also see it in the RSI down here because we would get an oversold right here at the buy point, and then we would buy it, and we'd be good. And it would also be around the same. This is what it would be, the ABC. We would be about right there, and then go higher. Right? That's ideally for me what it would look like. That's what I want to see happen. Whether or not we'll see it happen that way, I don't know, but that's what I would like to see happen.
And I'm curious as we get here towards the end of the show, and I'm always curious as to how far people make it when they watch this. We haven't really paid a lot of attention to those analytics. You can figure that stuff out, but we honestly, we just make these things and just let them go, and then just let this grow and build and do whatever it's going to do. But I'm curious for folks out there, how many people go to these charts on their own, right?
Yeah.
So if you're listening to this show and you're at the comments of either YouTube or Facebook or wherever you're watching it, let us know. Like, yeah, I go make up my own charts and look at this stuff, and if you don't, is it because you don't know how to, or is it because you don't care? I hate to say don't care, but like I just don't have time to do it. Like
sure.
I don't do it.
Yep.
Right. I get to rely on you.
Yep.
Right. Because we talk daily, so I don't have to do that.
Yep.
But if I didn't have you, right, daily,
you'd have to do it. If
then
you
I'd be
wanted
like,
to
hey, I want to start looking at these charts.
There are absolutely guys out there. I did a show. We did a show. I think it was just me. I think I recorded it and you posted it. I don't think it was a.
It was one of those.
I think it was one of those.
Shows.
I think it was the one-man show. But I did that. I sort of walked everybody through how to set up.
Yeah. No, I remember that.
You remember that one?
Yeah.
And there are some guys that some Bob and some other guys out there that follow the show pretty closely and have definitely gotten a lot out of that particular one that we did, because I was showing them. It was step by step how to set it up.
Yeah.
You don't have to have. I mean, I have I pay for a service in stock charts, but you don't have to. Right. I wouldn't, if I didn't have to, create some of the moving average lines and some other things.
And we have to use their product on our show, and we have to pay.
Right.
We're just doing the right thing by just making sure that all the copyright kind of things we cover because we have a subscription with them,
right.
And we give them credit for it and all that kind of crap. So, but if you're just the average Joe, you don't have to worry about all that.
No,
you
don't.
Just go on there and do it for free.
It takes a little bit of work. I mean, you gotta go in and you gotta fiddle with the settings and like anything else to get it how you want it. And it doesn't save. Everything I do it saves because we're paying for it.
Right.
But it's we could do a show on it.
Yeah,
maybe
that's kind of where I was going to. Is if you give us some comments on. Yes, I do it, or I wish I could do it, and I don't know how. If there's some value, we might just do a separate kind of video to kind of walk through how to do it.
Yeah, maybe we could do it on a Zoom call. Maybe you can do it. Yeah. I mean, who knows?
All right.
But yeah.
Let us know.
Okay. That was definitely the crux of the thing. I just want to go through the 3 9-month charts just to.
Let's do it.
Because most of the last few charts were either long-term and/or I had made the chart up a couple of weeks ago. So
I'm out of Red Bull and you're out of beer, so
we're gonna have to hurry. All right. So here's what happened on this week. As you probably know, was not a great week for the market. You can zoom in here for a minute. We had Monday, Tuesday, Wednesday, Thursday. We had Monday was not a horrible day, but then. Tuesday, Wednesday, Thursday were all down days. We did get support here at the 10-day moving average, but got support on Thursday, and then on Friday we had a reversal day. So we're still above the 10-day moving average, but we'll see. I'm not super optimistic. Again, we had a 1, 2, 3, which is corrective, and then we had a 1, 2, 3, which is also corrective. So the only way this gets out of being a 3-step is if we get a close above 3,600, and I just don't see it happening. You get the RSI rolling over. I'm not super optimistic. Again, I would love to see us down here at the 200.
And it's odd to want that, right? That's something I think some people have to figure out. It's like, it's odd why do you want the market to go down? It could go up and that's fine. Yeah, but then we're not the confidence level then is not going to be there. Right. Because you just can't ignore trends and patterns. You can't.
Right.
You can at your peril.
Yeah. I mean, you remember the fear and greed indicators that we did, right? I mean, right now we're like 54, 55% greed. If the market closes above 3,600 before the election, the greed thing will spike to ridiculous. It'll be like 99% greed or something, which indicates any day now the thing's going to collapse to like, because it's a contrarian indicator.
Yeah.
And I mean that because you were right. I would feel much better if we're down here at the 200-day moving average, because the market risk of more losses at that point is much lower than it is if it's up here at 3,600.
Yeah.
And that's, as we keep talking about, I mean, at least in the back of my mind, it's always there. It's about minimizing downside risk. It's not about being at the top and going higher. It's about being out when the market's going down.
So we don't lose money.
Yeah.
That's the key.
It is. So, okay, so that's where we are on the C fund. S fund actually, S fund had a huge move in the last couple of weeks. Fortunately, we were, of the 50% that we were in, half of that 50%, so 25% we were in the S fund. So we got a pretty good chunk of this move here. It was pretty good. We got some support at the 10-day moving average on Thursday. Had a down day today, so it looks like it's rolling over. RSI looks like it's rolling over. We shall see. We'll see about the S fund. The I fund, we are back to being right in the middle. I mean, we just can't. The I fund can't catch a break. We've got that overhead resistance line at 66. We got that support line at 62. We got the sort of the mirroring line almost in the middle, right at 64. It's a very symmetric looking. I'm sure there's some math that you could throw in there. You could do all kinds of descriptive language here. At the end of the day, we have to get out of the 66 on the top and 62 on the bottom. That's it. I mean, you get the support and resistance lines, and we got to get out of it, and we're right in the middle of it right now. So, I would hold what I got in the I fund.
And we're watching it like a hawk.
All right. This was a little bit of an ad hoc one, and it was long, 56. Well, it probably wasn't 56 minutes, but that's what my counter says.
Yeah. We got about 42 minutes of recording so far.
Yeah, okay.
Not too bad. We try to keep these less than an hour. I don't know if people noticed that. Initially, I think some of our earlier ones were about an hour.
Yeah.
And we don't really think about it too hard, but what we're really trying to do is just make it consumable, right? I mean, just not something that we don't want to be Joe Rogan. Or I don't know if you guys.
I love Joe Rogan, but
I love him, but you got to watch
a week to
2.5 hours.
Right.
Yeah. And I have friends that have gone on there, and I don't want to listen for 2.5 hours. I know. And I'm like, no, that's not going to work. So this isn't that kind of show. Right. This is hopefully bite size enough where we get what we what we're trying to get out.
We get some good word out. We get out what we think is important for the week.
Yeah, we could definitely do it faster and be a little more analytical and dry about it, but I don't. Then it's a little hard to listen to.
No, that's like me when you're not around. That's what they get when you're not around. And I feel bad because I can't. I can't do the pithy comments. I'm not making it like that. So
yeah, it's hard to do anything when you're just by yourself staring at a screen.
Yeah. And all you get is my little cube in the top right corner or whatever.
Yeah, we're still working on that. We're going to figure out a way to do that when we're not able to get together logistically. That'll all go away, in a few months because Jerry will be here full time with me, and we'll be happy.
Yeah, it's going to be much better.
Yeah. All right, guys. Well,
I'm good.
That's all you got?
That's all I got. And anybody out there that gets the Rona.
Don't get the Rona.
Don't get the Rona.
I will tell you, I wear my mask religiously. I wash my hands like a freaking maniac, and I stay away from people for years anyway, and I still got it. So
yeah, it's weird because we got it within a couple of days of each other, but nobody else in our either combined circles or individual.
We definitely gave it to each other somehow.
Yeah,
but that's good that we were able to contain it.
Yeah.
At least crazy. I'm glad we were able to contain it. None of our friends got sick, so I feel good about that.
All right. We are on the mend. Have a great week, y'all.
See you guys next week.